Hi traders, this is Brad Gilbert with the FX Market Insight for Thursday, the 17th of October. All right, now we're getting into the real nuts and bolts of the trading week, just coming into the early stages of the Asian session. Now, no real change this week. Okay, all week obviously the fundamentals are very active at the moment. There's that Trump impeachment seems to be building, Brexit charging along, and a little bit quiet, the China-US trade deals. There's been a bit of a fluctuation here. And this is what you really need to focus on and that's a pretty major geopolitical event. So when I'm looking at the currencies, I'm looking very closely at dollar yuan, right? You can see how a positive deal was going to be, well, it was talked about as being a possibility. Dollar yuan falls, like the yuan appreciates. And then there's been no news and it's been a bit of a drop off. So we're seeing a bit of a correction there. Now, the other major news that's actually impacted, it's actually quite good to see the US retail sales figures, like much weaker than expected. And this has led the dollar index itself to a little bit of a drive to the downside. If I just give you a quick look at the other charts, you'll see that, let me just get the drawer up, the euro, and I've just shrunk the euro time frame in a bit. You can see here, there's a lot of room here for euro to move to the top side. Dollar Swiss is about to break down through hourly and daily support. So you know what? This is, I mean, it sounds strange. You go back to a couple of weeks ago when we were down just under 109. This could be back at 111.5 very quickly, okay? Especially if we get a little bit more weaker US numbers. The Aussie, a little bit of a breakdown yesterday, back into the range as we wait the really key RBA data, and that's the Australian employment numbers today. Very important. So the Aussie and Aussie crosses will be on high alert. Kiwi also sort of just banging away within recent ranges. You know, that US-China situation is really putting a bit of confusion on the Aussie and Kiwi. And no real confusion here with dollar yen. Bit of a safe haven trade unwind despite weaker US data. Okay, it's a pretty hard one to trade at the moment, dollar yen, but it is cruising to the top side. It's the safe haven trade which is driving that. And if you thought trading was hard, check out sterling. Dropped from 127 sort of 70 down to 126.5 up to 128. This thing is all over the shop. Obviously, Brexit, a potential deal, really positive for the UK. I think it's going to happen, and it's but one bag negative story, and it'll be back at 122, 124 very quickly. So hard to trade, but good to watch, or fun to watch, I should say. Now, dollar CAD, we had a real big opportunity yesterday with the Canadian CPI data. Just bring you back to that data briefly. Now, it's one of those situations where it's very rare, but you get mixed data. What I'm talking about is month on month, really weak, right? And, a little bit of weakness there on the year on year, but sort of significantly weaker on the, like the negative, and we've still got a positive number on the year on year, but, not huge. So it's a bit of a mixed reaction. The market was watching probably closer, as I said in the yesterday's thing, the core CPI. If anything, that was a little bit of an improvement there on the Bank of Canada core. So a little bit better result. It sort of nullified a little bit of the weakness on the CPI numbers themselves. So with dollar CAD, I'll just whip back to that chart. You see, I mean, it did drift lower, probably more so to do with the weak US retail sales figures, which came out at the same time. But no follow through, as you can see, a bit of a mixed bag on the data. It's straight back to 132, the figure. So all up, it's off about 20 points. I'd say that's mostly US retail sales. And we do have the Canadian federal election this weekend, come Monday. So a little bit of a hard one there as well. Now, just coming back to my FX Trading Hub, no real change in the analysis, even with those weak US retail sales figures. It hasn't done enough to really push it down that far. So sterling still geopolitically driving to the top side. That geopolitical side is hard to trade. As I said, you see a 100-point pullback and then another 200-point rally. It's a bit of a question mark where the direction's coming from. The rest of the pairs, not a huge amount coming out. So when you do look at where the potential momentum will come from today, Australian employment change, as I said, it's been highlighted by the central bank as being a key factor for their next guidance in rates. We don't really have any sort of major picture here. So unless there's significant variance, it's a very short-term trading opportunity, and that's the way I'll be looking at it. Then through the UK, we've got retail sales figures out. I don't think they're going to have any sort of major impact. It's all Brexit. Then keep an eye on the Philly Fed Manufacturing Index and the Canadian manufacturing sales. Now, the CPI and Canadian employment numbers, we've had those. You know what? Still a strong number here will push the CAD over the edge, I think, a little bit. And that's where you can sort of reconnect the data. All right, so Aussie employment numbers, probably the key one, and then probably manufacturing sales in Canada. Keep an eye on your analysis. It's not exactly like fruitful pickings at the moment, especially with these geopolitical events just creating a lot of uncertainty. Not much in the equity markets. That's pretty flat numbers to me. So we've got nothing there to really, what we're looking for is something to lean against. Give us some sort of direction to work with, and we're not getting that clear direction at this point. So there's nothing we can do about that except remain patient and wait for those opportunities to build around the upcoming major events. All right, guys, that's it from me. Have a good trade day. Cheerio.